Hi everybody, welcome back to my channel. This is Oliver Wiedmaier at Ollie underscore all caps on Twitter, founder of Voyage Trading Group. Today is September 10th, and we're going to be going over recent price action and what to expect in the upcoming trading week. Okay, now we're going to take a look at the SPY. And so last week, I noted that we needed to stay above this trend line. And not only did we bounce right off of it, but we broke through the 50-day and we closed above this resistance line here. So this is a very good sign that the indices may have bottomed on June 17th and made its third leg bottom on September 6th. Interestingly enough, we actually had a follow-through day on the NASDAQ. Okay, and here we have the NASDAQ comp. And as you can see, we took out this resistance line, but we ended the week above it, and we actually ended it on a follow-through day. And so it's very important to know that not all follow-through days means that we're going to have a bull run, but all bull runs start with a follow-through day. Okay, so we can see on the VIX that we closed the week at 22, and that's huge for me. I like to see it under 25. I really want to see it under 20. Generally, you have a much easier trading environment. You can set your stop loss and then just let the market do its thing. And choppier markets, you have to be way more precise with your stop losses, or you have to keep running your stop loss up. Generally speaking, when the VIX is below 25 or especially below 20, it's a much easier, smoother trading day. And so you can set that stop loss, go about your day, and if it gets hit, then it gets hit. And that's exactly how I want to, as someone who works full time and has a family. I want to be able to set my stop loss and not have to worry about all this chop up and chop down. It's either going to work or it's not going to work. I don't have to worry about this intraday chop around. Another very important indicator that I use is the put to call ratio. Generally, I want to see it heading towards about 0.7. Definitely want it to be below 0.8. And so we are right at 0.83. So this is very good. Hopefully, as the weeks progress and we get closer to October, which I mentioned last week, the closer we get to October, hopefully all this kind of bear symptoms of bear markets ease up, and we'll transition into October into a new bull run, and it'll be a much easier trading environment. And the important thing is we did have a pretty good flash. We went above 1, which is signaling an extreme bear. And so maybe that was the last little flash of the bear that we needed to get the fear out of the market and make an environment now where the low's been set. We've taken out previous lows. We've had the follow-through day. Put-call ratio is working itself out. The VIX is working itself out, and the leaders are holding, and we can begin to trade much easier and enjoy the end of the year in a much earned bull run. This has been a very difficult year to trade, and if you're still here and you still have capital and you still have mental capital, then you should be very proud of yourself. So let's be done with that, and let's just jump right into a watch list that I'm going to be using heading into the trading week. And if I can nail maybe 3 or 4 of these trades this week, I'll be very happy. And if they hold, then we know that we are transitioning to a very strong market. And that is something I'm very excited about. Okay, first stock on the list is going to be ARLP, and it is making a tight flag over here. It did just take out and close above the 21 EMA, and on Friday we did have a above volume day, and it actually closed below the declining 8 EMA. So something very important is I want to see it take out this high here. The high of this is 25.92. So ideally, I would like to see it take out this candle on high volume with an entry of 36. So ARLP buy point of $36. The next one is SQM. Now this, actually, let's go back to ARLP. So something very important about this is you have to zoom out really far, but it does have some resistance from November of 2016. So do I believe that there are still shareholders that are here waiting for this to come out so that they can break even? No, but it's something that's very important, because if there's a strong buyer here, I'm sorry, a strong seller here, it could push this down. Now, if there's not a strong seller here, then this should break out very easily. So we just have to be very cautious and understand that there is a little bit of overhead risk. There's potentially a seller over here, potentially a seller over here. So that's why we trade with stop losses. Okay, now we have SQM. This is getting very tight off of this high here. This high is 115.76. And we can see that it's made a low here, it's made a low here, and now it's made another low here. So maybe one more low here, if not taking out the high of this candle at 115, call it 75. On very high volume, I'd be very interested in taking that as a trade. The next stock is STEM, STEM. Now, this is not your typical pattern that I like to trade, but it is making a height flag here. And it does look like it broke out this resistance, and there's some good volume here. The problem is there is a lot of resistance from June 2021. There's resistance from February 2021. And so if we can clear this pattern here, this tight flag here, then I think we can make our way back up. Good thing is it's a $16 stock. We do have risk defined here at about, call it 1363, 13.5. And so if we can give this stock some room to breathe, I think it can start building that right side of this really long base here. The next stock is MCK. I'm looking for it to take out the high of this candle, which is going to be 371.92. Call it 372 as a buy point. If you want to, you can try to sneak in as it takes out this candle. So this is call it 366 and 26 cents. VRTX, again, the breakout is going to be above 305.95, call it 306. If you want to try to sneak a early entry, I'd say 295.11. Again, this is making really nice tight patterns along the 50-day moving average. If it can tighten up right under here, I think it could break out. And especially if it can get above this 306 number, I think you are looking at a really strong breakout and potential true market leader. ASO, it does have some resistance up here, so we need to be cautious. But any action above 49.86, slicing through that on some high volume, I think you're looking at a really decent trade. OVV, again, a lot of overhead volume. A lot of these stocks are going to have overhead volume. We're coming out of the market, bear market. And so the idea here is to find the one that's strongest in this tight pattern here that can get through all that resistance. And so for me, I would like to see it take out 50.91, possibly taking out 53.67, probably would be a safer entry. However, if you want to try to sneak an entry a little bit earlier, call it 53.05 is what I would take it at. GFS, this is getting real tight here, making this cup with a handle pattern. We do have this downtrend line here, so we are going to have some resistance around 63.50. An early entry would be taking this out at 62.05. SM, same pattern. We has this downtrend line here. So take out this candle at 46.34, and I think even taking it out at 47.20 would be a decent trade. And then you can deal with the resistance up here at 50, call it 54. But that is a really nice long base, and if it can break this out on some volume, I think you can get some pretty good points out of it. AR, similar setup, got this downtrend line, making this kind of tight VCP. For me, taking out 40, 47, so entry of 40, 50, I think is a good trade. SELH, this has been really wide and choppy, but at some point, this thing should break out. It doesn't have to, but I think trying to get in on a non-traditional breakout is the way you want to do it with this one. So for me, if it has another down day, I would like to try to take it off of the 21. And for me, I would like to let that bad boy run. This is a true market leader in the making. So for me, if I can get it down here, call it right on the 100. If it tests 100, I'm going to buy it. If not, trying to take it out of the 107.67, so call it 107.7, I think might get you going in the right direction. SWAV, SWAV, this is Shockwave Medical, still holding up. We have to see how it holds up against the 21, but it had this nice breakout on strong volume, and now it's holding and making this tight pattern. So let's take a look at it, see what happens. If you can get it again around 282.5 off the 21 EMA, or taking out the high of this candle, which is 367 cents. So call it 370 cents. You might have yourself a breakout here. We'll have to just see. This is another one that I would let breathe. You do have defined risk on the low of this candle, which is 269.02. So call it 269. It's a bit wide, but if you can grab a couple shares, you might be able to get the needle moving. Really good fundamentals. This nice long breakout. Now it's making this nice high tight flag. This could go much higher. Woof. Now, this has been really tricky to handle. We do have a strong seller up here, but it is holding the 21 EMA. As you can see, it keeps getting pushed down. So I don't know if there's a seller up here, or if there's a seller over here, or if there's a seller over here, or there's a seller over here, but there is a seller. So the idea here is, again, non-traditional breakout. If you can get it on a down day up against a key moving average, I think you have a better chance of not getting chopped around. Last but not least is GFF. Huge move off of this kind of 50-day tap. I think taking out this high, or even taking another test of the key moving average. So if this is a down day, I would try it also. If you can try to get closer to the moving average, I think you have a little bit better risk reward ratio. If not, if it just comes out the gate blazing, you might be able to catch it off the high of this candle, which is 34.92. Again, you will need to let that one breathe, but this is a very strong name. Lots of gap ups, lots of strong buying up against the 50-day, which is signaling that institution are owning this. You can see there's a lot of institutional accumulation. And so this is a name that we want to get involved in. If you look at the weekly, it paints a much better picture than on the daily. Sometimes you have to look at the weekly as well as everything else. Okay. Thank you guys for watching. Hope this is helpful for you, and good luck out there. Now's the time to still be cautious, but I think it's time that we can start letting trades breathe a little bit and not be so tight. At least that is my strategy going into this week, preparing for that October bull run if we get it. Okay. Thanks, everybody. Later.